What's up, everybody? Michael and Coco here to do some technical analysis on the financial markets. Today's date is October 8th. The markets just closed recently. We're going to be looking at the S&P 500, the Nasdaq 100, the Dow Jones, and the Russell 2000 today. We're going to be looking at multiple time frames, going to be keeping it short, sweet, and to the point as best as I know how. Let's get into it. All right, welcome back. The first thing that I want to do is apologize for not making my video yesterday. Yesterday seemed to be somewhat of a boring trading day, and today really kind of felt the same way. However, there is some key levels and patterns that are showing up as not really warning signs, but we need to be very aware of what's taking place. And really right now, it seems like the bulls might have I would say not really the huge lead, but they kind of have the jump start. But the bears aren't far behind. So it's going to be very interesting. Obviously, month of October, a big month, and we're kind of fighting back and forth for this stimulus deal. So it seems like the market is really just kind of moving up during the futures after hours, and then during the market these last 2 days while the cash market was open, it just really moved sideways. So let's go ahead and just look at some key levels that are on my radar. Are you bored? All right, I'm gonna put her down first. Okay, so first off, what we see here on the daily time frame is first, we had the breakout of the falling wedge. That is bullish. We started moving higher and higher. We hit our first price target right here. That was literally almost perfect. I wanted to wait for 3,200. Not a big deal. I was still in some long positions. We moved higher. Now what we're forming, this could very well be a rising wedge, which is bearish, and or the potential for a bear flag. We have the pull here and then we're moving up. Okay, so that's the bearish view. However, when we show the other time frames, that's what we'll get into, it kind of looks like an inverse head and shoulders, where you have a left shoulder here, you have a head here, and then you have the right shoulder here. The key level for the neckline was the 61.8 fib level. We've been talking about that on multiple market briefs, and today we closed above it. We closed at 3,446, and the fib level was just $4 less than that. Now, in my personal opinion, that's not really that strong of a close. We tracked sideways, which is bullish, right? We moved up higher in the futures market, and then we just went sideways. That means the bulls do have control, and we closed above it. So, point bulls right there, and we closed relatively strong, but we're still within this bearish formation. So we got to be very careful, be very nimble here. So what can happen? Well, first off, anything could happen in the futures market. There can be news going on right now as I'm recording this, and something could take place. But the next level that I want to see is this 3,480. I'm going to call it this red horizontal line. It's very possible that we get squeezed up to the upside. Now, this rising wedge has confluence right here at this level. And if you look back to the previous candles here, once we broke above it, it acted as support and then it acted as resistance. So it's very possible to see some resistance right up in this range where we might break out and then we might backtest and potentially head higher, or we can have some negative news where it comes to the downside. As I see it right now, the bulls have the momentum to the upside. This could be some trickery. It very well could be, but as I see it right now, we are kind of getting this move higher. Here is the 2-hour time frame, and this you can kind of see the inverse head and shoulders a little bit better. If you want to see these charts, they'll all be linked down below in the description. And we were tracking this rising wedge that we've been just mapped out on the daily, but you can see it just kind of more in tune. And you can see right here, we get through this box. That was that pink box that we kind of mapped out, went above it, but we still have obviously some levels right up ahead. This is where I got the 3480 from when you just look to the left of the chart. I want to show you the 30-minute time frame because this time frame, now that we mapped out some next levels of resistance, is very important to kind of see how the day traded. So first off, we had a gap window right here. So we gapped up and then we came back tested the support that we mapped out previously. And then really we went sideways for the entire day, kind of building in higher lows. And then we broke out this very moment right here. Now, this happened towards the close. So what's interesting about this happening towards the close is usually when we get a breakout of previous areas that were very strong levels of resistance, so that fib level technically it was honored today. Like, we could not get above it. It was technically perfect. It was bouncing back, bouncing back, bouncing back, and it tried to do it. Now, if it happened more intraday, we might have seen some sort of a squeeze, a push higher, but we saw it right here towards the close. Why am I telling you this? Well, first off, when resistance is broken, it then becomes support. And if it's a strong level, like the 618 fib level, and on the 30-minute time frame, you can clearly see it tried throughout the entire day. Sometimes when we get above that level, that means on the other side, there's short positions that need to cover. So you have people that have stop losses above these levels. What happens for the bulls when we start breaking a breakout? Well, they want to buy more into the breakout. What happens to the shorts? They have to cover, so they have to buy back their position. That can result in a short squeeze. So, not too sure if this is going to happen in the futures market, but it's very likely that if the futures market does head higher, it could be covering the positions to basically get a squeeze to the upside. So right now, the bulls are kind of in favor. However, when you scope out like we've already previously did, we're in a rising wedge. It's still technically accurate. We have gaps right beneath us. It's very possible if we get the kibosh on the stimulus, if they literally say, and they stop going back and forth with it, if it cuts off, then I think the bear rising wedge pattern will fall to the downside. However, right now, it just seems like they do not want that narrative to be let loose. They did right here on this big pullback. Clearly, the market reacted poorly, and Donald Trump was very quick to walk back those words. So the news, unfortunately, the headlines, what the politics are doing, what they're saying, has a huge impact on the market, which makes me all the more want to kind of step back and be more risk off in this type of environment. I'm looking for high probability, risk first reward setups, typically lower beta, some are higher beta. If they're higher beta, then I reduce the amount of position sizing that I'm using for those specific trades. So those are the levels for the S&P 500. Let's look at the VIX. Here is the VIX. The VIX is still holding in this inverse head and shoulders pattern. Until it breaks to the downside, I'm going to still keep it as is. But right now we've been tracking sideways, pinned above the 50 and beneath the 200 period. So it's just been going in this channel. We broke through just a little bit lower today, but we moved up higher, so we're still pinned. The price action is between those. I think if we see a breakdown lower, we can very well come, down to this 22 range, which could push the market higher. And if we start breaking out of this, that could be potentially around the news that, there is not going to be stimulus or a deal hasn't been processed. And then we get this spike higher to around, if we break above 38, it could go to 50 quite easily. All right, now let's go ahead and take a look at the Nasdaq. We're going to look at the 2-hour time frame on the Nasdaq, the Dow, and the Russell 2000, and then we're going to kind of just wrap it up from there. What do we got going on with the Nasdaq 100 on the 2-hour time frame? It has been trading within this price channel now since I'd say roughly the 28th here of the previous month. We've been kind of started here on this gap up, creating this gap window. It acted as support, but the window was not closed. All right, so we've been bouncing, ping-ponging around in this level. A break higher of 11,600 should send it up into around this 11,750 to 11,850 level. That was the original kind of target that we set on the breakout of this falling, I'd say bear channel. It was a falling wedge, but then we kind of remapped it out like this. We saw some positive divergences. So the levels that we want to make out or watch for at least are this gray box, which is about 11,200. That should act as support if it comes down to that level. And then we could see a move up potentially higher. If we start seeing it close below that, then we're going to have to reassess and see kind of what's at play here. I didn't draw this in, but you can see a head and shoulders as well right here. So we see the left shoulder, the head, and then the right shoulder being formed. So if we start breaking above this pink box, that could very well be the neckline to send us even higher. Now, it's also possible that this red horizontal line clearly has a lot of resistance, 11,600. That could act as a neckline as well, because that's kind of where the shoulder right here bounced at. You had some kind of more price action there. So it's very possible that this could send it higher, or maybe we go up and then back test it and then move higher in the bullish case. So we're going to have to watch the channel and create trades around those major areas for the Nasdaq 100. Here is the Dow Jones, and the Dow Jones is very similar to the other charts. So we have a bearish pattern, we have a bullish pattern. It's like, who's making the decision here? We don't know. And I think that the real reason for this is because of, one, it's the month of October, and we have the seasonality chart that we were looking at earlier. We have the stimulus deal and the talks all about that. So there's a bearish case and there's a bullish case, and the market is telling us that right here on the chart. The neckline, if you wanted to call the neckline right here, 28,352, maybe just a little bit higher. It technically broke above that, but it's still within the rising wedge pattern. So we're going to probably have some interference up here at about 28,000, between 500 and 600, 28.5, 28.6 in that area. So there's just going to be a lot of back and forth potentially, and I think the market can go higher if we get positive news around stimulus. I still believe that. Can it go higher? Yes, it can, but when you scope out and just take a look at what's going on in the economy and what's, it's just all negative stuff taking place, and really the market has just been reacting back and forth around vaccine news and coronavirus news, and then also the stimulus news and also the Federal Reserve news. So it's this just very interesting intersection right now, and it lines up very well with what's going on outside of the markets with all the news. So once again, bearish pattern, bullish pattern at the crossroads, really for both of them. We're going to have to monitor this one very closely to see what takes place. We need to look at major areas. If we start breaking down, I would suggest that then we could head lower into this 200 period moving average. If we start breaking up higher, well, then like I said, 25 to 28,600 would be that kind of level of confluence of other previous resistance. So it's going to be an interesting, obviously, few days, and we're going to be monitoring this closely. Let's take a look at the Russell 2000. So here is the Russell 2000. We're looking at the IWM. This is the ETF, and this is actually looks more bullish of a chart than most of the other ones. Now, our RSI indicator is moving into oversold territory, overbought territory, I apologize. And we have, somewhat of a hanging man slash kind of doji candle that kind of gapped up. We kind of closed the gap. So that's somewhat bearish. We might get somewhat of a pullback here, but we did break out of a major area of resistance. And when resistance is broken, it then becomes support. We have a gap down here. The 50 period is kind of sloping into it. So we'll monitor that. But really, overall, this one looks like one of the stronger breakout type looking charts. And, it's supposed to reflect what's going on in the economy. And right now, in my personal opinion, it's not reflecting it completely. This resembles the small caps. So it's interesting to see what's at play here. I do think that the main resistance is going to be at the previous all-time high, right around 167.50, and the price is trailing at 161.86. So like I said, if you want to play, long, you could wait for a pullback and then have a stop loss underneath this, or potentially even under the 50 period and trying to trail it. And then maybe we get a move higher once this all comes down, or you kind of just wait this out to see, what can really happen. If we're breaking out and we get a continuation to the upside, you can look at the individual stocks that make up in this sector for good setups and potentially play those breakouts as well. So that's kind of like my view, the technical levels on the indices that I track. Let's go ahead now and look really quick at the Pring bottom fisher. I just want to bring this to everyone's attention. Here is the Pring bottom fisher, and what we've been saying is this indicator, it's very good at determining market bottoms. And you can see that when the line crosses below the black here, sometimes it has to go even lower than where this is at. I've seen it as low as 27, and that really helped find a good bottom, but we didn't quite reach it there. That's why I'm kind of just watching this with caution, but you see that over here we crossed above it, and then the Fisher signal line crossed above the 10 period moving average. They both started sloping up. You match it up right here where the market kind of found its bottom. Right here is the S&P 500. I mapped out again the inverse head and shoulders, kind of just came up above that neckline right here today, and we're starting to see this cross over, and we did see it cross over the 10 period, and the 10 period moving average hasn't fully sloped up yet at this particular point in time, but this could be signaling to us that, hey, the season of this move is going to be carrying us a little bit higher. So it's so hard to determine right now because of the fact we have just this overarching important news waiting to be let out. I think that the stimulus package will eventually come. Whether that's before or after the election, zero clue. I don't know. Maybe a partial deal. I really have no idea there. And there's a lot of people that are saying and acting as if they know for certain that something's coming. And, you know, all we can do as traders, as investors, as technicians is look at what the market perceives is going to happen. That's why I love charts so much, is because what we're seeing right now is what the market is trying to predict. And as I see it, we have a bearish pattern, a bullish pattern, and some other type, stuff saying, hey, it's just a lot of indecision, but we're at a kind of very important crossroad. So it seems to me something's going to take place in the news. Something's going to happen, and it's going to propel this market either further up or further down, and it's going to happen here very, very soon. Just by looking at this chart, it's easy to determine that. That's all I got for you today. I once again apologize for not bringing out a video yesterday. I'm only going over these charts, but I do plan, I don't know if I stated this already, but I do plan on bringing in more charts and intermarket analysis. So we're going to be looking at things like yields, currencies, bonds, and the reason why is because when they move certain ways, and the bond market is extremely important, when they move certain ways, we can determine what might be taking place in the stock market, or who or what sector is going to really benefit from these type of moves. And I can't wait to start talking about that stuff. But as of now, that's all I got for you. I will see you back on the next Market Brief.